I think that Bitcoin and Ethereum will do very, very well as liquidity improves, and at least the United States and maybe China will follow suit as well. The U.S. has an election coming up. It's time for both political parties to hand out goodies, especially the Republicans. They're the ones who, I think the Poly market puts their odds something at losing the House at some like 60% or something like that. I don't know what it is now, but it's over 50%. The market expects the Democrats to take the House. I don't know about the Senate. I haven't looked at the odds, but the only thing that's going to stop that from happening is Trump and his administration just give out a lot of money, print it, give the goodies out to their supporters so they show up at the polls in November.
All hell may be about to break loose, and history suggests this is exactly how it starts. A quiet 25 basis point rate cut from the Fed didn't make headlines for long, but it sent a signal. Jerome Powell's era is nearing its end, and whenever a Fed chair transition happens, markets enter a fragile, unpredictable phase. Add to that growing speculation that the next chair could be far more aligned with the Trump administration's economic agenda, and the picture sharpens fast. Trump's priority is clear: reignite growth. And historically, growth during election cycles doesn't come from restraint, it comes from liquidity. With House elections approaching, political pressure rises, deficits expand, and money printing becomes the path of least resistance. Every major cycle tells the same story. This is where crypto enters the frame. Arthur Hayes, CIO of Maelstrom, and one of the most macro-driven thinkers in crypto, argues that Bitcoin isn't reacting to hype, it's reacting to policy. When fiat supply expands, Bitcoin absorbs the shock. Hayes believes the next wave of liquidity could trigger a violent repricing across crypto markets, with Bitcoin leading the charge into 2026. What you're about to hear isn't speculation. It's a macro roadmap built on past cycles, political incentives, and monetary reality. Pay attention. If you find value here, like the video, share it. Drop your thoughts in the comments, and subscribe for daily Bitcoin and crypto insights. Let's dive in.
Doesn't matter who wins, because both sides promise goodies, right? The Republicans promise goodies, the Democrats promise goodies. Goodies are paid for with printed money. It's not paid for with increases in taxes to a large extent, and so therefore Bitcoin benefits. Obviously, if you're a stock picker, it really matters who wins, right? Democrats like climate activism, social justice, these types of things. Republicans like drill baby drill, AI, all those sorts of things. And so picking a stock that benefits in one of those buckets, really depends on politics. I have no idea. I'll just stick with Bitcoin. It doesn't really care who wins in November, because they are both going to print money. And I think that Trump knows that odds on favorite they're going to lose. He's going to have to accelerate the money printer and make sure that all the relevant government appointees get in before a possible Democratic Senate, and they just basically stonewall him for the next 2 years and don't allow any of his appointees to get confirmed.
Tell me a little bit more about that. I know that one of your recent newsletters talks a little bit about this. It's called Hallelujah. You argue that massive government spending is forcing the Fed into stealth quantitative easing. Just talk to me about what that means and what it means for markets.
The U.S. Treasury publishes a thing called the quarterly refunding announcement. And if you're a serious crypto trader, I think you should make sure you read that 4 times a year. The most recent one came out on, I think, the 3rd or 4th of November. And for the fiscal year 2025, which ends in end of September, 3rd quarter of September, the U.S. federal deficit was something like $2.3 trillion, right? And so then that was what happened. We care about what's going to happen. The relevant, either the banks, the government itself, they all estimate that the 26 and 27 fiscal years will be in the range of $2.2 to $2.5 trillion deficits. So if the deficit and the financing of the deficit by the Treasury and the Fed was what drove Bitcoin higher and crypto higher, at least in a dollar liquidity context, that situation is going to persist and only get worse, because central banks, at least non-U.S. central banks, are buying less and less U.S. Treasuries. I think there's a chart going around that shows the percentage of gold as a reserve asset of non-U.S. central banks is higher than Treasuries for the first time in a long time. And so without these foreigners buying this debt, it relies on the US government to print the money in some way, shape, or form. There's lots of different games that it can play, and you can get into the minutiae about how the money markets work. But from a high level, it doesn't really matter. If the politicians are not going to spend less money, then the Fed and the Treasury have to print it. So you tell me how much money that the US government's going to print, I'll tell you where Bitcoin is, or give you an estimation of how bullish I am. And if they're going to 2 trillion plus deficits, and it could get worse if there's a recession or a war or what have you, then Bitcoin and crypto are going much higher.
Mike Novogratz said in an interview recently, if Bitcoin hits $1 million anytime soon, it's actually going to be very worrisome for the US economy. It sounds like you are right along those same lines of thinking. If Bitcoin kind of goes to the moon within the next year, we have bigger fish to fry.
I mean, I don't know if there's going to be a problem per se. It's just, purchasing power will be diminished. It really depends on social cohesion within the United States and how people handle that, and what percentage of the population owned the asset that went up a lot and which percentage didn't. Do food prices go up a lot? I don't know. Do rent? All the different things that the majority of people care about? Maybe nothing. There is no inflation in food, and it's just the Bitcoin financial asset goes up. I don't know. So, not necessarily mean there's going to be some sort of like societal breakdown just because Bitcoin's at $1 million. I mean, it'd be different if you said that inflation is going to concentrate on beef and a pound of beef is going to be $150, right? There'll probably be a revolution in the United States if that happened.
I think the last time you and I spoke, you said that Bitcoin could hit $200,000 by the end of the year. Do you still hold that projection?
I'm sticking with it. I think I said $250,000 Bitcoin, and I am going to stick with it until December 31st, 11:59.
Pardon me. I tried to make it a little better for you there, Arthur. I tried to say it was 200,000, knock 50 grand off, but you're sticking with the 250. By the end of 2026, what do you think?
I think we're be 500 to 750,000 Bitcoin. I think 2026 and 2027. This is the meat of the money printing. The Trump administration is going to do what they know how to do best. What every government knows how to do best. When in doubt, print the money. If the people are unhappy, print the money and hand them a goodie. And they're going to show up at the polls and hopefully vote for you.
What do you think the biggest trend of 2026 is going to be when you look at the crypto industry?
I think stablecoins are still going to be a massive trend. I was speaking with a digital asset head of a large TradFi bank, and he was telling me that all the GSIBs, the globally significant banks around the world, are getting together and they're going to launch their own stablecoin. Right. And so I think that'll be a big deal. And he said it's, they're working very, very quickly to get something out there, maybe next 6 to 12 months. So I think these are the sorts of things that are really going to accelerate adoption of crypto and get people understanding how a wallet works. Right now, we all understand how online banking works, right? I think even my mom could probably use an online banking app. And that takes a lot of learning for people to, I'm not going to go to the branch. I'm going to, get on this phone, and there's not going to be a human talking to me. And I'm going to do all these things on my phone, which is not how you've been doing banking for the last, 500 years. So how do we get people to transition to, okay, now I'm not going to go to the branch. And now, what is a bank? I don't even know. I guess I have this like dollar, yen, euro, yuan digital thing, and I move it around. And there's this whole other ecosystem that's not connected to the banks. And there's all these other products that I can use and trade with. And literally, I just, a few taps on my phone, and now I've got my dollar, my yen, my euro, my Bitcoin, my Ethereum, whatever. It's all over on the internet. And so this is really the explosion of DeFi, when the everyday person has been habitualized to using these digital assets.
From where you sit, what's the biggest challenge for the industry that's still ahead?
Biggest challenge? I think people need to be patient. People need to not expect the present to be like the past. Like every interview that I do is like, oh, when is altcoin season? I mean, I had a great altcoin season. Hyperliquid, Athena, right? Like this is, Zcash. Like there's been a lot of standout performing altcoins that have made people a lot of money in this cycle, just because you thought that, you're just going to spray and pray on some dog shit coin and it's going to go up 10x just because it's called an altcoin. Well, I'm sorry, the game changed, right? So you need to adapt.
What would you say the biggest win for the industry was this?
The blockchains work, right? Bitcoin blockchain works, Ethereum works. We continue to produce blocks. It's immutable. It works. We had Liberation Day in the US, risk off around the world, markets crashing, crypto was fine, no bailouts, all that kind of stuff. So I think, we had a good year. The stuff worked just as it worked every other year.